So today on Breakout, we are not just talking venture capital. We are talking about how AI is learning to find billion-dollar startup better than your favorite VC partner. Guess Cyril is a physicist turned investor, now founder of AlphaSemantic.ai, a platform training machine to spot fundable startups in real time. He has backed deep tech moonshots, building investment scoring engines, and things most of us are still guessing in venture. So if you have ever wondered what it looks like to fund the future using data, not just your gut, you are in the right place. Let's break up. Hey everyone, I'm Darshil Khunt, founder of Club, and this is Breakout, where we bring you the most unfiltered stories from founders, funders, and future shapers. My today's guest is Shrail, the mind behind AlphaSemantic.ai. He's just not building AI tools for venture capital. He's building what might be the future infrastructure of venture itself. We are talking physics, pattern recognition, failed deals, founder traction, and what this really takes to back 10x outcomes in the world drowning in noise. Cyril, welcome to Breakout.
Yeah. Thanks for having me.
Cyril, so I want to take it back. You have studied physics, not business, not economics, physics. What pulled you towards the path in the first place, where you were always this analytical, curious person who wants to figure out how the world works, or did that come later in life?
Right. So, frankly, I think it's an accident, right? So I've been just doing math and physics good in school, and one day I just found myself looking at some advanced problems in physics exam and was excited about that. Then I won a couple of competitions in school and all that. But yeah, I absolutely agree. Physics is a great way to understand the reality, right? Because there is it's very totally honest with you, brutal and honest. You just have the laws of physics, just like Elon Musk says. These are the only rules. Well, you understand me. So yeah, I absolutely agree. Physics is a great way to understand things and then build something on top of that.
Perfect. And Armenia, where you are based currently, not is a typical startup launchpad, right? What's about growing there have shaped how you think as an investor as well as a builder?
Right. So Armenia is a nice place. It's obviously an emerging place, not very big right now. Recently, we announced that we have another Armenian rooted unicorn. I think a couple of weeks ago or something. Overall, I think up to 5 unicorns have been founded here or founded by founders who've been from Armenia or something. So Armenia is small. It's about 3 million people here living, but there is a huge diaspora in LA, in San Francisco, in New York, other cities in the US and other countries as well. So it helps a lot. These connections between the homeland and other parts of the world helps a lot being a founder and investor as well, because again, it's all about the network, how we can access capital deals and all that. So yeah, I think Armenia is an emerging place. It had a great wave of new brains and talents after the war in Ukraine, because a lot of Russians, Belarusians, and Ukrainians flew here as well. So yeah, I think it's an immersion place, and you need to watch that.
What was the moment that made you say that I'm not just going to analyze data that you already work in venture capital, but I'm going to build something new with it?
So yes, I published a paper about how we predicted startup success and startup exits. It was my friend who just gave me a hint. Why don't we build that? Why don't we try that? We tried that, we published that, and then we had just a great response from venture capital funds, the industry enthusiasts, and just fellow builder. Then we just understood, why don't we just try and use that in real life? So I think that was the inflection point.
Perfect. So, was there a moment, a deal, or a startup, or a pitch that made you go that I want to be on the other side of the table? Because you already joined Alconic, they have back space tech, clean tech, hydrogen trucks, orbital biotech, and you were doing some serious deep tech, right? How did your scientific background give you an edge with Alconic?
Right. First of all, deep tech is a tough place to be. I think most of the companies in the future will be built from deep tech. It will be deep tech companies. Predict like 80% of future unicorns will be in deep tech, because in today's world we can do software companies kind of easily, everyone can do that. Any guy in India, Russia, the USA, and any other part of the world. But deep tech comes from mostly science, patents heavy and tech heavy industries such as universities, corporations, and all that. So it has some mode. So yeah, I think deep tech is future. I've seen a lot of deep tech founders. It gave me just overall being a VC and sitting on the other side of the table gave me a lot of confidence that these are just people. They just try and some succeed and some not. So why don't I just try and see what happens? So I encourage everyone listening to go and try if they were thinking about something like this.
What was that one investment that you taught you the most, that you have learned the most from that investment? Either it had worked or it doesn't work.
Right. I can't distinguish only one investment. I have like a couple of dozen cases where I sourced, led, or negotiated deals for between venture capital and startups, deploying money. I think the most important part in probably what I learned overall from this experience is that the team is paramount, right? Almost at any stage of the startup, mostly early stage, obviously like 99% of the success there is defined by the team because team can pivot into new industry, it can bring new talent there, it can like gain traction or something. And also at the later stages, founders do make some difference. They can find a new way, they can find new partners and negotiate a big deal that saves the company. So I think the team is the paramount in the venture capital overall and especially in the early stages. That's probably what taught me during my way through VC.
So because initially at the early stage startups, the team is the most important. The ideas they can shift patterns based on the market, based on the customer sentiments, based on the pain points and the gaps that are in the market. But initially, the team is something they can hold on to a longer visions, something they want to build for a next 10 years. Yeah, so let's shift to Alpha Semantic. What was the origin story behind it? And you went from investing in tools to building the tools. What was that I had enough moment and I want to start this new company?
Right. So it was very natural way of starting a business. So as I told you just a little before, I wrote a paper where I and my partners try to implement data science and big data into venture capital. Then I tried to raise a fund based on this algorithm and paper, like the overall engine that we built. And then we understood that building a fund is very tough. You need to raise money, you need to get into deals and all that. But we already have this very essential part of the equation, which is the algorithm that finds the best deals out there. And we just got a natural inbound of funds who wanted to use that. They begged us to license that to them. And I decided to pivot from a fund to a tool. And that's how Alpha Semantic was founded. Just fans reaching out to us and asking if they can use that. These were our first customers. Then we pivoted a few times, like within this very scope of providing a data tool for VCs. And here we are, a few funds using that. Some are closing deals from what we showed them in the pipeline using this software. And yeah, that's how it was founded. And that's the backstory behind that.
That's pretty interesting that you started from fund and then you convinced that fund, as you mentioned, does have a problem for being a first time investor. That many interesting startup they already have a heavy VC funding and they don't take the investment or checks from the first time funders. How did you describe Alpha Semantic to someone who is non-technical in VC and explain how does it work being an associate or analyst?
Right. So it's very simple. It's like AI powered. It's like AI venture partner, right? Venture partners, for those who are not from the VC industry, are there people who just work with venture capital funds and connecting them with founders they know. And that's what the venture partner does, right? And Alpha Semantic is an AI venture partner that sleeps zero time per days a month, connects you with founders like 24/7, and just bringing you the best pipeline out there, especially for your thesis. So for and describing how it works, simply we just under the hood there is an engine, first of all, a semantic engine that obviously no one on the market right now has. For example, PitchBook, Crunchbase, they have kind of research, but it doesn't work really well. So we built our own semantic search to find the startups that fit your thesis, like your verticals. And secondly, we just scrape data from the internet about all possible startups for you and understand which one is doing great. And we just made a list of that top startups and just providing them with you. And finally, the last one, the agentic part of the solution is that you can, as a GP, as a VC, you can just click a button and connect with these founders in seconds.
That's interesting. It's taken a lot of time for them to research, find the right startup, then research about that industry, their pattern, the region, all specific things, and then you can just do it in a click, and it just take your time out of the research part and do the next phase. What was
Right.
harder, like building the tech or convincing the investor to trust it?
Well, I think founder is a tough job, obviously. So it's more accountable. You just get the immediate feedback. That's probably why I decided to pivot from being a new fund manager, building a fund on top of this algorithm and this IP to a tool because you just get immediate feedback. Funds either use that or not. They either pay you this money, this amount of money that you're asking, or they do not. And they can invest in the startup. It like takes a little bit more time than just pay you for that tool. But within the first month, we just understood that the solution is working, not only solving the problem, but it's also connecting them with the right founders they actually invest in. That was the inflection point. And again, I think being a founder is much tougher job than being a VC, even though VC is a hard job, obviously, they do not only scroll Twitter, making a couple of introduction, and they then go to lunch. But it's also a tough job. But I think founders don't really get uh, the amount of respect they needed to get because it's a tough job.
Definitely. That you have been from the both side, you understand the tables of the founders as well as the investors. And you are
Right.
currently bootstrapped and no venture capital raised yet. Why did you take that route, especially for if there is an AI in 2025, you do had work in venture industry or you're looking to raise fund for your startup in future?
Right. So it was not also my choice, right? When we needed money the most, we didn't have any offers, probably because we were not that vocal and out loud speaking about the solution we're building, and we just needed to get through that anyway. So we bootstrap, get our revenue, lived on that, then get more revenue and all that. And then eventually we were offered a couple of times to get some money from VCs who were interested in what we're doing and using that solution. So yeah, it was just the natural way of things. We didn't have any offers, and then we bootstrapped, and that's it.
So are you looking to raise any funds in the future for your startup?
No, we're good on mining right now. We're not looking for raising, but we're happy to talk to VCs and any other partners who are interested in this general solution for how to enhance their pipeline, co-piloting, and all that. So yeah, happy to talk to anyone, but we're not looking for money at the moment.
Perfect. And what did being a founder teach you that being a VC never could?
First of all, being on the other side of the table, being the founder, yeah, now I have just much more empathy for the founders. And I strongly recommend any VC out there go and try to build something, even a pet product, try to sell that to someone. Just do that and understand how tough that job is. And probably you understand in a little bit more details what questions to ask, what's important and what's not. Yeah, being a founder makes a better investor, that's for sure. And yeah, highly recommend that to any investor out there.
Perfect. And you said most of the venture capital is still gut instinct plus spreadsheet. What's the problem with that? And what's break when we keep doing that way?
Right. So yeah, you're absolutely right. There's a great survey, an industry report out there called Data Driven VC Landscape, authored by Andrea from Germany, from Early Bird Capital, if not mistaken. It's like a great overview of what's happening right now in the venture industry, data-driven wise. So yeah, it's obvious that mostly all VCs out there, I'd say 95% VCs do the old school job. They use spreadsheets, they use they sometimes don't use any CRMs, and obviously it's not effective. You need to hire analysts, you need to do more job when you just can source data, analyze pitch decks, do portfolio monitoring with tools, and yeah, you either build that inside or just buy a tool out there. I've been doing research on that matter as well, and there's about 500 different tools for VCs and private equity. It's open. It's on my LinkedIn if you want, and go check it out and probably find a cool tool for you or build it by yourself. That's also cool.
Perfect. Thank you so much for the reference. And your research about startup prediction using back tests and portfolio data, right? What signals actually matters in predicting whether a startup succeeds or not?
First, it depends on the stage, on the task that you're doing, sometimes on the data, because the data is very noisy. It's really poor data out there in our industry because it's a non-transparent industry. It's not a public market where everyone knows everything. Just yeah, have some general statistics about how many startups raised, how much probably they raised, but you never know what the valuation was and all that things. There are a few approaches how you can do these algorithms, what you predict. I'd say top five signals that you're probably going to watch is founders background, the previous experience, the market, what the market is, and what the direction of the startup is. And again, it depends on the stage slightly. It depends on the industry that you're looking for. Is the generalistic model, or especially for SaaS or AI companies? So again, it depends. But as I told you, the rule of that the founder is the paramount works here as well. So you're looking first at the founder and their background.
Perfect. And let's talk about AI in VC. Will replace humans or it will just augment the sharpest ones?
We don't know yet, actually. To be honest, I think if we do some thinking here, I think the top 10 venture capital funds out there will still remain to be the top 10 funds out there because the best founders go first to the Sequoia, Andreessen Horowitz, Glenn Perkins, and all these top funds. And these funds already using these tools. But mostly the funds will remain in the same quartiles they were before, right? It's all about the brand and all that. We're just talking about the efficiency, how things operate within these funds. And to be honest, all these top funds already using these tools. And if you're just an average VC out there, there is no way you can compete with other funds who can use that. Probably you're not gonna become an Andreessen Horowitz or but you anyway need to do that just to keep up with the pace of other venture capital industry out there.
True. And if you're planning that way, if alpha semantic work at a scale, what does the fund of the future actually look like? Or something you want to look like in next 5 years that alpha semantic need to be resonated with this, or you want to add more features where a fund can do everything from one place, or you want to be specific to, okay, I will be only solving a specific problem for the venture capital.
So regarding what the venture capital fund will look like in a few years, probably in the future, it's probably going to be a solid GP or a couple of GPs, probably so many of the partners of the fund who raised money from high net worth individuals or some fund of funds, some institutional investors. And then everything else is just AI. They looking for companies, they making introductions, they writing emails, memorandums, reports, collecting some asks from portfolio companies. So I think it's only the GP who stays there, no principals, no associates, no analysts, obviously. Yeah, that's what I think will look like in probably 5 to 10 years from now, probably even.
Perfect. And what does the pattern recognition mean to you? And how do you make sure it doesn't become pattern bias?
Right. Yeah, Shil, I really love your questions. That's very smart. So there is obviously a bias within data. If you have the bias in the data, then you have the bias in the model that's deciding what startup is going to succeed or not. So, yeah, there is no good way right now to solve that. My approach to that is that our tool just helps you find the best startups. It doesn't really decide to whom you need to give your money. It just highlights some top startups that you probably missed. And since we give you more options to invest in, I believe we make our best job to diversify and make this non-biased for investors, for startups, and the whole industry benefits from that.
And as a solo founder, building infrastructure for other funds, how do you stay sane? Like, because it's in AI, there's so much of rush, breaking things. What's the founder trait that like widely overrated by investors, and what's the one that very underrated?
Right. I actually have a co-founder. He's a technical guy, but yeah, you're absolutely right. Being staying sane and healthy is the most important part. I recall the saying of one of my favorite guys in history called Lev Landau. He's a physicist as well, just like me in the beginning. He's a Nobel Prize winner in physics, in theoretical physics. Great guy. He had saying that three parts in life. First, work. You need just work and love what you work, what you do at work. Second, you need to have love, like family, wife, girlfriend. And third, you need to hang out with your friends. Work, love, and friendship are the most important parts. I'd say I'd add to that list that you need to sleep well and exercise. I'm personally running half marathons, just running daily lifestyle. And yeah, I say these core pillars.
Definitely. In the initial state, they do get burnout. So initially, most of the founders do work like the way they walk up till they go to bed. They just work. So that's basically the founder life I have heard, and I also lived like that. So it's always hard, but at a point you need to take some time and off to take care of yourself and keep that momentum going to build your company for the longer run. What was the boldest prediction for the VC industry that you think most people will disagree with?
I don't know yet. I think I dropped a couple of things in this podcast already. So first is that about 80% future unicorns will be somehow deep tech related, maybe hardware only. And second one is that there will be only GPs in the time frame of 5 to 10 years from now. So yeah, we'll see that in the future, I guess.
So if someone is listening right now, maybe a founder or a venture capital or someone who is wants to build out a company, what's your advice to them? Because you have been
Well,
from the both sides, founders and investors.
for investors, it's very clear. I already told that just go out and try to build something, maybe pet project, really small one, but with some real customers that love your product, that you sold to, did some marketing or B2B deals, negotiation. So I think it's very important for VCs, for founders, guys. Just don't be pissed off on on the investors. They just overwhelmed with the number of pitch decks, and probably if they don't answer you, it's probably not worth it and go and do something. So founders sometimes being rejected by VCs. It happens in the most of the time. Guys, just keep up and try building again. Don't be pissed off on the investors. So these are two advices, one for founders and one for VCs.
Perfect. And final one. What do you want you and your company remembered for?
Well, that's great. Yeah. Well, for me, I think I just want to be a right guy. I want to build something. Nothing's needed to be remembered at this point in my company. I hope it will be just a little step towards a better industry, towards a more effective industry, because we've brought some new efficiency, new AI wave into the industry, and we'll see how it plays out in the future.
Perfect. So that was the Breakout with Cyril, a founder not just building in the space, but redefining how we fund the future. So if you're a founder building something the world isn't ready for, or an investor looking to sharpen your edge, hit that like, share this episode, and subscribe. And Darshil Khunt, and this is Breakout by Credex.club. Till next time, stay curious and stay building.